So here we are, you're expanding in Saudi Arabia. I suppose the question that comes to mind, I looked at some of the numbers, 2016, 18 million tourists. A lot of that was to do with religious tourism. Why now? And why are you so optimistic that Saudi Arabia is really ready for expansion?
Sure, we've been in Saudi for probably 40 or 50 years, so one of the longest operators there, so we have deep relationships in the market. We're really excited to see kind of how the market is evolving and changing, and so a lot of focus on luxury historically, but now we're seeing a focus on mainstream hotel brands like a Holiday Inn and Holiday Inn Express. We signed a deal to launch 10 hotels there in Saudi now because we're seeing more domestic travel taking place outside of just religious tourism. Yesterday you saw the announcement, of course, the first movie being played since the 70s. You're seeing great resort projects taking place on the Red Sea. So significant changes taking place in Saudi economically, which will drive domestic tourism and really overall business growth in Saudi. So it's exciting.
Yeah. Some of the experts that we've been speaking to are looking for additional context as to how big a priority Saudi Arabia is and how much that's going to contribute to what is a very global business. You said how long you've been in the region already in this part of the world. What exactly do you expect from Saudi Arabia in terms of delivery to your presence here?
Sure. I mean, we have 30,000 rooms in the Middle East, but globally we have 800,000 rooms. So it's not a huge portion of our business today, but it is a growing portion. We'll grow about 25% in the region in the next 3 to 5 years. And 75% of that's going to be in Saudi, in the UAE. So it's principally going to be in those two markets right now. Because of the economic development, the focus of government on infrastructure, hotels. So we're really, again, excited about those opportunities. But again, what's the real change that we're seeing is in the mainstream hotel brands. We're seeing our owners now who typically wanted luxury resorts only and luxury hotels saying, we need the mid-market hotels to appeal to a different set of customers going forward.
And the one thing you mentioned, obviously, you've now opened one of your biggest Holiday Inn brands here in the UAE. One of the conversations that we have with property owners, etc., is about oversupply and pressure on yield. Where are we with that story? Do you sort of bat that away, or how do you look at the oversupply story here?
Yeah, the conversations I had with the Minister of Tourism last night and with some of our owners here is about the long-term health of the market. Of course, getting ready for Expo in 2020. I was in China for Expo 2010, so I've been through that similar experience of having markets invest heavily in infrastructure and hotel leading up to big events. So we're seeing demand growth here at 4% in the UAE, but then clearly supply growth is faster than that, so that is pushing pressure on RevPAR and on revenue performance. But the long-term health of this market is strong. And the example I'll use again is China. Shanghai went through that same experience pre-Expo, and today it's one of my strongest markets globally.
We are seeing a rebounding oil price in the last few weeks. It's a theme in terms of price pressures around the world, but in the Middle East, it plays a critical role in terms of sentiment. At what point do you say, well, oil at $70 a barrel or $80 a barrel, $90 a barrel is going to make a difference in how consumers travel in the Middle East, and it's going to make a difference in your bottom line?
Yeah, fundamentally, the strengthening oil price is really good for the region because it drives increased investment in businesses in that sector, which drives hotel demand. So seeing the oil price continue to rise and gain confidence. But I think the pressure on oil prices forced the economies to look at diversification and see the rising role and importance of tourism. And so balancing out the economies maybe from being a one-horse show now to having multiple drivers of economic growth, which is good.
Let's take you on a slightly more global tour. We know what you're doing in the Middle East. We've got a board for our viewers. This is RevPAR. We've rebased the data back to 2010. And it shows, obviously, the Americas relative to Europe and relative to China. Europe and China rolling over. We've had tax breaks in the US. Are there more business travelers? What's your RevPAR? Give us something under the hood in terms of the US market.
Yeah, we had globally 2.7% RevPAR growth last year. But in the fourth quarter, it was beginning to accelerate in the U.S. So the impact of, I guess, economic confidence, the impact of the tax breaks was clearly driving.
And is that really materially showing through now?
You know, it's probably too early to say, but definitely you can see confidence. You're seeing businesses commit to investment in the U.S. that they previously weren't committing to. That investment in infrastructure, business, new jobs drives hotel demand. So fundamentally, the more the acceleration there is in GDP and more investor confidence will be good for our business in the U.S.
So would you say the outlook for the remainder of the year has improved?
You know, I think the strengthening economic conditions are a really positive tailwind for the industry globally. There's always the one-off events. You never know what's going to happen out there. But right now, on a global basis, we're seeing really positive trends for the industry and for IHG.
Where is the opportunity in the UK? I don't want to get it lost in the weeds of the politics of Theresa May. But some big property deals fell apart this week. And that prigs my consciousness that people are beginning to pull back. Is this an opportunity for you to buy more assets in the UK? Would you invest in the near term in the UK?
In terms of us personally buying assets is not consistent with our strategy, but partnering with key strategic owners, something we're very focused on. We think the UK and London in particular is an incredible long-term market.
So you're still bullish on London, bullish on the UK?
Absolutely, without question. We think it's a very, very strong market for us. It's only 5% of our business globally, but it is where we're based, and we think that there's more opportunity for us to grow all of our brands in that market.
I want to get back to some of the other global themes that you pointed out that are sort of driving your outlook for the year. We have a lot of rhetoric at the moment, tensions around trade, around protectionism. Yeah. And I know in a previous conversation you said, well, these are short-term events, but the more rhetoric there is, the more damaging it is for sentiment. At what point do you say, okay, this is now a risk for my global outlook?
I mean, the benefit of our model being in over 100 countries is we get to defray risk over many, many markets. I said, what's good for business is things that drive travel, that drive investor confidence. What's bad for business is things that basically inhibit the movement of people, investment in tourism, and so forth. So the more rhetoric that gets ramped up over time, which causes investors not to have confidence to relocate businesses, travelers to go on tourism, is a bad thing. And so, we always look to have governments be working at helping people connect and travel versus impede that.
I loved my line of the day yesterday was about millennials. Danone was changing the world one yogurt pot at a time for you guys.
What do you follow?
You're a millennial. What are you doing to catch that market? What's the one key thing? I mean, you're not serving yogurt, but you're serving yogurt pots. What are you doing to get the millennial to spend more? What's the ARPU of your millennial?
I think one of the reasons why we acquired Kimpton Hotels and Restaurants, the boutique luxury hotel brand, which we've now brought internationally, was really trying to diversify our brand portfolio and give them something special and unique. We have a set of customers who loves InterContinental.
Do we have a RevPAR number for the millennial? Do you break it down?
We don't break it down by millennials. An interesting thing about everyone wants to talk about millennials.
Yes.
I'm an Xer, and I'm really proud to be an Xer because we're kind of the ones that are helping to drive business today. But millennials are actually going to change as they get older. Everyone kind of views millennials as these young, single, not married, no kids. As they get married, as they get kids and settle down, they begin to look a lot more like us, And so I hate to say that to everyone, but the millennial card might get a bit overplayed.